Alright, what's up? Welcome to the video and all that jazz. Alright, so it is just a Saturday afternoon and I wanted to go over, you got bull traps and bear traps and just go over some of the indicators, again, that I use. Um, you know, Again, I'm probably the worst trader on YouTube. I am learning. This is a little documentation of what I'm learning and how I'm learning it. Alright. So, all right. Most of the time, you want to come to your time frames. Okay, it's always good to start on a very, very high time frame. All right, you can start on any time frame here, and let's start on the highest one we got. All right, so right here you got your 6 month. Your 12 month. All right, right here on Bitcoin, you can see you have a bearish engulfing candle on Bitcoin. To me, that signifies that the bears are in control of this year. To me. Now you got your 6 month. All right. So again, we have a bearish engulfing candle on the 6 month. Okay. That would signify to me that the bears are still in control. All right. Of not only now you got a bearish engulfing candle. Not only that, you got a little M formation here, right? Over these two 6 months here. Drop 6 months. So, could we expect a retrace, right? Somewhere up into this region over here, about $34,000 to drop again and continue the pattern, only to form an a W right into there. Now these are macro, macro charts here. All right. So on the 6 month, that's in essence what I'm seeing on the 6 month. Then you get your 4 month. Now 4, is good because it's divisible by 12, right? So you can kind of see what's going on, right? So I'm looking at the candlesticks, right? You got on your 4 month, you have a lot of selling going on. I'm going to sell to the buyers, sell to the buyers. I'm going to slow things down right here, a violet vector candle, right? Notice how it paints a hammer, right, to the top side. This is normally bullish. And in the narrative at that time, we had Bitcoin to 100K, right? That was the narrative being fed to the retail public, okay? And now I first heard about Bitcoin right in that time, right around May, right? I missed all of Bitcoin, all of it. So, I see this chart, it's going straight up, you want in, all right? So we have this picture being painted for us. And then in the next 6 months, a lot of wiki action, But in essence, the next 6 months closed right around, $45,000. Interestingly enough, there's an imbalance at the chart on the daily at that time, which I'll go over. All right. But so that's, a level of interest. All right. Here. All right. Now you got your 3 month. All right. 3 month is interesting because, people operate in quarters, quarterly earnings and such, right? So, right here in your 3 month, you have your big run up and your sell off, right? So, this is a reversal pattern on your 3 month time frame, right? Using the vector candles. Okay? So we're selling. We got to buy back. All right. So on your 3 month, right, we've bought back once, and now we've bought back again. Now, the volume is saying that we've bought back Bitcoin 3 times. Okay. All right. And you got your 2 month. All right. 2 month is whatever, but the pattern kind of like presents itself a little bit better. You can kind of see the trend a little bit on your 2 month, right? There's your M, and it's just been straight drop. 1, 2, 3, Look at all these red candles. You're bound to get a bounce. So essentially, you're getting that bounce on your 2 month, right? Now, moving averages. All right, and for the moving averages, I like to use this chart because it's got the most data on Bitcoin. All right, you got a lot of moving averages here. All right, they start all the way back in 2011. All right, now on the 2-month, currently, you're holding your 50 EMA. Okay, but you know, investors and all that stuff, they're not operating on 2-month charts, really, right? They operate on 3-month charts, right? Your 50 EMA just appeared down here around 9,200, 9,300. All right, that would be an area of interest. You know, you'd want to see that hold, right? Hold the 50. Always want to hold the 50. Now, on a monthly chart, though, on a monthly chart, this is very interesting, is you have your 50 moving average, right? Which you are currently sitting below. All right. Okay. Now, where's my 5? My 5 and 13 EMA. All right. So if you're going to your Trader's Reality indicator, right? You got your 5. My 5 is the green. My 13 is the white. All right. 5 is the green. 13 is the white. All right. On the monthly time frame, all right, you got a cross right here, right around Cinco de Mayo. What that tells you is that there's a shift in the zone. That this zone is basically done for. That this trading range is basically over. We're finished with this range on the monthly time frame. All right, up until all that. That we're done with that zone. All right, maybe we'll go by the closes, I suppose. All right. And it fired off at the close of April. Then we had May, where we have a violet vector candle, where there's a lot of transactions happening at speed, but that this signifies to me that there's a lot of selling. Okay. All right, but they're slowing it down because it's a lot of people sold off right here. It's a level of interest, right? So that speed happened here, and they had to slow it down, right? And buy some of those, right? So, you know, in essence, that becomes like a new zone on the monthly. All right, that might be a level of interest to come back into at some point, which sits roughly around $37,000. Okay, because remember, when somebody buys, another person has to sell, and usually the person that has to take the long position from all the shorts, right, is the market maker, and the market maker has enough money to bring price back up into these zones to take back some of the contracts that he's collected during that time. All right, so that zone right there is a major level of interest for me. Okay, and there's no trading volume up in this gap right here. Okay, so but the moving averages on the monthly tell me that he is done with that range, this previous range right here. And I don't want to stay on too long because I do have, it's a Saturday and I have family and everything like that. But in essence, we're done with this monthly range. We're done with this. This is now over. All right. The closes matter very much. All right. So there's your close. All right. So on a monthly time frame, this is as high as I think price would go, about 37,600 to, you know, whatever. Because we were done with that according to the moving averages. And of course, you can get wicks above and all that other good stuff because wicks are where he's going to trap. All right. So if you could look on the monthly time frame, we're trapping shorts, we're trapping shorts, we're trapping shorts, right? 3 pins to the low, shift out. There's your pins to the high, pin, pin, pin. Now I've trapped the longs, reverse. All right. Now here, I'm trapping the shorts, I'm trapping the shorts, I'm trapping the shorts. Notice how he slows things down here on the monthly, shifts back up. So now he's got all the shorts trapped. So this is a major reversal. All right, and we close right on the 50 EMA. So on a monthly time frame, one might say that we're just back testing the 50 EMA. Okay? Which, you back test the 50, you want to see a continuation on a monthly time frame. All right? Because really, how many hits to the low have we seen on a monthly time frame? Like major hits, I mean, one might say this is the first hit to the low, right? And then to me, this would be the second hit. I wouldn't really count that. See, here's where it gets a little bit tricky. And this is the confusing part. So 3 week, right? 3 week, again, moving averages is one of the things I'm focusing on at this time, right? A major shift right here on the 3 week, which is a good week to trade on, I think, because you can see some nice pins. I like the pins. All right, you got your cross. Where did you get your cross in your 3 week? Right around here on your 3 week, right? Which meant that on a 3 week level, we were done here. So we've trapped all of the longs here, and we'll continue down, right? Your 3 week EMA, or 50 EMA, is around 27,200, right? But my vector candles tell me that the market maker has unfinished business all the way up till $32,000 to $34,000. All right? So maybe you get up that high. And, traps are usually done in a hurry. It's a trap, fast move. All right? And right here you can see that there was a lot of volume in there. All right? A lot of volume. Okay? So now, you got your weekly, which is a huge time frame to be trading on, right? Now, on the weekly time frame, at least on Binance, is where you might want to look, because that's where all the liquidity really is, right? And just to go back and show you that it's basically the same. I mean, look, on the 3 week, you got a blue vector candle. That's big, right? On the monthly, do you have your violet? Yeah, here's your violet vector candle. All right. I mean, to come back into the violet vector candle, I feel, and I don't know the system all that well, but I feel like that's where the trap ends. When you come back up into your violet vector candle, that would be where your trap ends, right? Somewhere into that region. And, there are imbalances, that's how high the trap can go. There's like clues or whatever, right? Nonetheless, because we're discussing moving averages at the moment, I'm going to go back to this chart and go back to the weekly and talk about the weekly. Now, they got this thing called the death cross, right? But that's whatever. To me, price is going to move in a direction to make these things cross, because the market makers know that we trade the weekly, and if they make the weekly cross, everyone's going to go short, right? That there's going to be a lot of people's whatever algorithms and bots that have made them, go into short positions or whatever, and they're going to fire those off where they can trap that liquidity and take that at another time. All right, cool. All right, so now we got our weekly death cross. All right, on our EMAs, right? Now, on a lot of people's charts, now the thing is that this is the longest data that we have on Bitcoin, right? Where the price actually goes back, all the way in time. All right, so these moving averages, are the best gauge of the long-term trend, in my opinion. All right, it has crossed, right, which would signify a larger trend like a long-term trend reversal on the weekly. All right, because if you look back, they've never crossed before. All right, let's go back here. Blow this up. Right? Here they appear. Here your 50 appears, but here's your 200, right? So level 1, right? They don't cross. All right, if that is level 1. I don't even think level 1. To me, this is level 1. Level 1 is straight rise. Straight rise out of the box. Boom. Level 1. Retrace. Right? Level 2 has a peak and another peak. Right? It's got the little W formation in there. Right? Here's your W. Reversal. Okay? Now, that W, I don't know if it hit my moving averages the right way, but basically, you know, the W forms around key moving averages. All right? So here's your kind of, or V bottom, you know, whatever. W, but it's a W. Okay? You consider it. All right? It is a W. That's why there's 2 peaks. Because it needs to make a W. Right there. All right? Now, there's your level 2. Right? Straight out the box. Like a level 2 wave, right? Now, see, there's supposed to be 1, 2 levels, M formation, and then drops. All right? So it's hard to gauge, to be honest with you. Right? So this actually, if you look at the pins, really, on the weekly, right? Here's your level 1. Here's level 2. Here's your W formation at your moving averages, right? Level 2, you kind of confirm level 2 here, right, at your moving averages. But you look, you never go, and your 50 and your 200 never cross. All right, they almost crossed, right? Here, they didn't really even come close, right, on a weekly scale, at least. All right. And then we have our peak formation at the highs. All right. Now, this is crossing for the first time. However, on Binance, it has not crossed. Now, why do you think it hasn't crossed on Binance? Because that is where people probably set up their trading bots or whatever to, you know, buy and sell, right, at a certain, you know, EMA cross, okay? Right? And it's not time to sell yet, at least on Binance. So right now, on the weekly time frame, all right, you haven't crossed on Binance. And you're getting a retrace back into the 200 moving average, right? Where you had 2 pins, reversal, 2 pins, reversal. So this is a big moment, all right? This is a big moment in the chart, right? Here's where if the bulls don't step in, if people aren't convinced to buy Bitcoin, all right, by the price moving, by some whales that want to keep Bitcoin going up, right? They got to step in here, all right? At least on this chart, because, you know, even on this chart that has the data, the cross happened, but this chart isn't an exchange chart, right? People don't put money on that chart. So, like, you got something like Coinbase. Is this Coinbase? Yeah. On Coinbase, you can see if I was running a bot algorithm, right? They're about to cross, maybe, depending on where it closes, right? Sometime next week or the following week, right? So you're either going to see a huge pump from Bitcoin, right? Some huge whale is going to come in and pump up the price to keep these from crossing so that they can sell up here. That's very likely. You know, they're going to have to buy here, and then they will offload their bags over time there. Now, that would give you a back test of the M, right? Because really, you didn't get the retrace, not on a large scale, right? So like, normally what you would see is your M formation, right? Level 1. Here's your level 2. Back test your M, right? Continuation lower, right? To level 3. Where level 3 could be anything. I mean, this is Coinbase, it goes by the drops. This is level 2, can be a little bit tricky, but in essence, that would be maybe back test, this region down here, God knows, let's just do a little measuring from the drops, just as a measure. So, this is a drop. 60%. This is a drop of 47%. So I don't know how that goes, but let's say another drop from there of 60%, 12, 10, something like that, depending on how bad it is. So, nonetheless, let's clean up the chart. Go back to candlesticks. All right, so like trend reversals can be used, EMAs can be used to identify, major and macro, micro and macro, trend reversals. Also, another good thing to use for trends is Heikin Ashi candles. All right, so Heikin Ashi candles, you don't see the wicks to the downside. This is a strong trend up. Your pins are to the high. All right, now here your pins are to the low. So then you can even say they're trapping shorts, reverse back up, trap the shorts, reverse back up, they're trapping longs. So you can kind of see who they're trying to trap on your Heikin Ashis. All right, right now we have shorts trapped on our weekly. Right? I'm sorry, longs trapped. We have our longs trapped on our weekly. All right, right here we were trapping the shorts. Right, kind of coming back up, kind of a battle, if you will. All right, so let's go to the higher time frame. Here's your yearly. All right, let's get these lines off. Now let's go and knowing that the direction of the highest time frame is who they have trapped, because the direction, of the pins is who they are trapping, right? So over Bitcoin's entire existence, it has mainly trapped the longs. All right, that is who they have trapped up here, the longs. They have all of the longs trapped at the moment on a yearly time frame. All right, and then there has been a bear trap, another bear trap, right? And a bull trap, right, in 2020. Here's kind of like where the pivotal moment, and then we've kind of finally know who's trapped the most, right? And this is where the most selling has occurred, according to this chart. The most selling has occurred in the past 2 years. This is where the highest volume of selling occurred. Okay, now let's go to our 6 month. Okay, and you tell me who's trapped. Because don't forget, the higher time frames will tell you who's trapped. And Heikin Ashi candles will tell you who's trapped. Right now, the trend is down on your 6 month. Fine. 4 month. Trend is down. 3 month. The trend is down. 2 month. The trend is... Here's a reversal candle on the 2 month. Right? Here, on the 2 month, both sides are trapped. Right? Basically. Now on your monthly, at the moment, in this current February month, they have the bulls trapped. So we won't know who's trapped, who they trapped this month based on the price direction. But we can go to the 3 week. On the 3 week, they have the longs trapped. On the 2 week, they have the longs trapped. On the weekly, we have the longs trapped. Okay. All right. So let's go to like a 5-day. Who do they have trapped in the past 5 days? We've trapped longs 3 times, 3 pins to the high, right at the 200 moving average, right? That's who we have trapped. All right. But we haven't gotten that really back test of the M. I don't know. I gotta do more research on the method. But on the daily, you can see on a daily time frame that this is a very strong daily trend. All right, pause here, level 1. Right, that is to me for sure. I don't know if it's level 1. That might be a daily, might be 20. I don't know. I have to look back. But hey, look, the idea here is that now we're experiencing on our Heikinashis some very wiki behavior. Some very wiki behavior. All right, we were very strong. Right, this is a very strong level right here. Right. Kind of flatten out, and we've just continued higher, but it's losing steam. You can see how these flip, right? Go to your 22 hour. Your 22 hour, right? Things look like they're starting to bend a little bit. They're starting to bend, right? On your 22 hour, you've only had red candles. Now this one is a very interesting candle. The next one will be even better. All right? Because that'll tell me a little bit more about the direction that things could go. All right? 16 hour. This looks like we have trapped both sides, right? But right here in the direction, see, I've trapped. Look at the pins. Look at these huge pins on the 16 hour, right? Huge pins. That's who I've trapped, and I'm slowly continuing the trend. This is a good sign of trend reversal. All right, right? Because now all we have is red bars. All right. So if you go back and you look on like your 16 hour, right? You get these run ups. And the 16 hour kind of continues the trend. The trend was down at the time. And then you can get these huge spikes up. And then the trend kind of just continues. Okay? So things are looking bearish at the moment. Right? You've had a huge run up. Right? Indicators are, firing off. But on your 16 hour, in fact, you have lower lows in your price action, and you have higher lows in price. Now, the hard part about hidden bullish divergence is you never know, right? Because in order for you to confirm that, right, here's your touch, you can't break 20,500 on the 16-hour time frame for that hidden bullish to play out. All right? Now on the daily, again, you have lower highs and you have higher highs. That's relative to the price at the moment. Relative price index. All right? But, and this is why it can be so difficult. When you go, let's say, to your monthly, all right, it looks like you're starting a strong uptrend. They got a lot of momentum to the upside, right? A lot of momentum. This was a huge drop. You're going to get a retrace, There's going to be a stop hunt, All right, you look at your monthly RSI. Okay, everyone talks about this. All right, is this the right chart? Yeah, I guess so. All right, I don't know if they're drawing it like this, right? If that's the way they want to draw it, you know, I've seen people draw it like this. All right, you know, monthly RSI has kind of flipped a little bit. This on the monthly looks like a bear trap, right? You dip below and now you've come back in to your trend, right? Where on the monthly time frame, at least, right, you got lower highs in your RSI and you got higher highs, right, in your price action, which would be hidden bullish divergence, right? One little fake out doesn't confirm it. Now, the monthly hasn't closed. It's only February. So, is that the fake out? Because if this monthly, if this thing comes back down, that's a huge macro trend reversal. All right? Just saying. You don't have enough data on here for real, you know, whatever. You know, your 4 month, I mean, look at this. Your RSI is pointing down. Your 3 month, your RSI is starting to tick up, right? So on your 3 month, let's say you go into, you know, some kind of, you know, big retrace, you know, maybe you look for this. You look for a back test of this time frame if you're bearish, where that can tick up, right? You get a back test of that. That would, and then a continuation. That would confirm the trend, right? 2 month, you're not even close. All right, the strength on the 2 month is down, right? And your weekly, what we understand this in this indicator is this is a fish hook, right? Where price just shoots up to trap. This is a trap, right? Continuation, where Mr. Savvy would say that this is just room for the RSI for more downside, okay? Because if you really do look, I mean, on a weekly time frame at the moment, you got higher highs in your price action from here. All right, let's mark that off. On your weekly, here's another peak. Whoa. Here's another peak. And you have lower highs in your price action. And even from this peak here, we'll even do that for S's and giggles. All right, right here. To our current state at the moment. All right. Go back to auto. All right. So this is interesting because your RSI peaked over here, right? From this peak, you're still below. All right. Now those kind of line up, don't they? Right? So to me, right, that's really where you would want to break from. That downtrend. Now that looks like a fake out to me. Where this is where they've trapped all of the liquidity up in here. Right? Look at how nice that looks. Looks nice. Right? Here's where they're trapping liquidity. Right? And faking you out on the RSI. Thinking that, you know. Or is this the end of the trap? And here's where they trap the bears. Down up in here. Right? Now we've trapped all the liquidity down here for the bears, where we will continue on up. All right? Because really what you see as well on your weekly time frame is you have lower highs in your price action, but you have higher highs in your RSI. Do you see how it all gets messed up? Like, there's divergence happening all over this chart. All right? There's freaking divergence happening all over the chart. Now, on a yearly chart, all right, the trend is up on a yearly chart. However, the Heikin Ashis are telling us there has been a major shift in yearly candles. All right? But you've gotten red candles before, right? Red candle here, red candle here, right? However, we have this new yearly candle. I don't think we've ever opened and closed. We never had a Heikin Ashi is it like this one, right? Where it's like a confirmed downtrend. Because remember, the pins can kind of tell you that, like, I've trapped the bears. This could be decision, like, I've trapped both sides. I have both sides trapped here, right? Now here, let me get rid of my drawings. Right? Here I have both sides trapped. I have, you know, bears and bulls trapped. Here I have bears and bulls trapped. So these two yearly candles are very telling. Very, very telling. These are two pivotal years. Very pivotal. All right. The trend is telling me that we will continue down this year. That's what this says. So until, I don't know how high we'd have to go for there to be a pin, right? But let's take a look. There you go. I think price would have to come above $30,000 for there to be a pin. All right, so I don't know. If price comes above 30K, another trap is kind of set, you know, on the yearly time frame. You know, on your 6 month, it's down 34K. You know? So anything could happen. But if price does not come above that, and I don't know what the criteria is for there to be a pin. Let's see. Let's just take a quick look. All right. Let's see. This would be a good year to look at because there's like little pins on both sides. So in 2020, right? Let's look at 2020 not on there. All right. Let's just draw some lines and try to figure out how the hell these work. All right. A lot of liquidity trapped in here. Let's take off Heikins. All right. You got a little pin. You got a little pin here. Right? But price did come a little bit higher. All right? Price did come a little bit higher. It came 29,294. 29,294. All right. Okay. I mean, that's the line in the sand. Basically 30K. See what the hell happens at 30K. You know, if you see things starting to change at 30K, man, sell your freaking Bitcoin. Get the F out. Because the trend is down at the moment. The trend is down. Right? You can come all the way to 30K and not change the trend on a yearly time frame. And you can get, you know, 3 more years of down, you know? God knows, you know? Or, you know, this year could be down, this year could be down, and then you kind of finally reverse, you know, somewhere around here where, you know, they had this trapping candle. Okay? Here was a trap. You know, $400. Does Bitcoin go to $400? I don't think so. You know, $600-700. That was a trap, right? Where the last, it'd be like maybe the last time we trapped, they trapped. in this year right here, 2019, right? That was like the last trap they set. You know? That's why people call for 13K, 3K. There's your dollar cost average zone. That's where you would want to see price go to. Does it go to $1,000? I don't know. I don't freaking know. Nobody knows. But look, that's how you can identify like different swings in trend. Right now, this looks very toppy. This looks like, you know, whoever was down here freaking buying, right? You know, they really haven't sold. And there's a reason for that. In 2008 when it was created, whoever created it, Satoshi Nakamoto and whoever that is, and people have their ideas of whatever. You guys don't know where Bitcoin came from. You don't know anything about how, you know, it's decentralized, as they say. Look, it could be. They say there's proof, but, you know. What I do know is that there is a market for it, okay? And that market is making money, okay? That market does make whoever or why ever this was created money. It's a revenue. It does create, you know, money for whoever's pockets. So, if something's broken, if something's not broken, don't fix it. However, a correction is in order, probably. Right? A correction is in order. All right? You know, I don't know the system, but I don't think you're ever going to see a $75 Bitcoin. You never know. But in essence, from going on the yearly, if we go back, we get 3 years of bad, right? Because that's the theme, right? You know, 1, 2, 3 years of good, you know, 1 year of bad. 1, 2, 3 years of good, 1 year of bad. Maybe here's where it goes. Here's the correction, you know, 3 years of bad, and they take back the previous trap here. This is the correction. All right, and in essence, you know, according to your little vector candle theory, right, in this zone here, there's a zone they would want to take back at least 50%. You know, there you go, $8,200. All right, there's your bottom. All right, that would be the method. Anyway, you might get a wick too. Love the wicks. Something to come back into or whatever. Wick out the longs. Anyway, I'm out of here. It's on a Saturday. I don't know who watched this or who this helps, but I'll try to make more videos and describe how I, you know, try to interpret what the hell is going on in this world. Okay? Oh, this was interesting before I go. This is a freaking great chart. Just straight down. Love it. Love this chart. But look at this. This is great. If you're a market cipher person, which I am, I do like market cipher. I enjoy Mr. Crypto Face. All right. The RSIs on here are extremely interesting at the moment. All right. Oh, I guess I gotta go. All right, I gotta go. Peace out, Brussels sprouts. I'll come back to this another time.